Hello everyone. In today's video, I'll walk you through two powerful strategies I use every week to make some passive income, and those are cash secured puts and covered calls. I'll show you how I use them in my own portfolio and how you can use them too, even if you're a complete beginner. Please like this video and subscribe. It helps pushing this video to more people and we can all grow together as investors. All right, let's jump in. Let's start with cash secured puts. In simple terms, this means you are getting paid to buy a stock at a lower price if it drops to that level. I recently sold a $475 put on Intuitive Surgical, a company I love and have followed for years. After earnings, the stock dropped 7%, but let's look at its long term track record. It's up 7% in 1 year, 128% in 5 years, and 47,000% since IPO. So here's what I did in my Robinhood account. I noticed that $475 put option on ISRG expiring this week was offering a $55 premium. That means I could make $55 just for setting aside $47,500 for 2 days. Sounds like a smart, low risk move to me. Why? Because the stock was at $490 and I didn't think it would drop another $15 in just 1 day. Now keep in mind, if the stock does falls below $475, Robinhood will use that for $47,500 to buy 100 shares at $475, even if it drops further. But that's fine with me because I love to own ISRG at that price. This is how you turn idle cash into passive income safely. Next example is I sold a $250 put on Salesforce, ticker symbol CRM, for $50 premium expiring this week. I opened this trade on Monday, so that's $50 for 5 days. I love CRM both fundamentally and technically. It was trading near its 200-day EMA, which often acts as a strong support. And the most important point here is I only sell puts on solid companies, not junk stocks or high volatility names, even if they offer higher premiums. I prefer to protect my capital and then start thinking about making money with it. All right, before we jump further, if you are new into options on Robinhood, make sure options trading is enabled. Just head to settings, investing, and verify if you have options trading feature enabled. All right, now that we have options trading enabled, let's walk through a quick example of cash secured puts using NVIDIA. It's trading around $173 now. If you are interested in owning this stock at a lower price, click trade options and then select an expiration date. I usually prefer weekly expirations because in today's volatile market, anything can happen overnight. A sudden macro event can shake up the entire market. And since Nvidia is a high beta stock, meaning it reacts sharply to market events, I'd go with a $162.50 strike price that's currently paying about $50 in premium right now. I typically choose just one contract because remember, one contract equals to 100 shares, and you need to have enough capital to cover that just in case the stock dips below the strike price. With the market at all time highs, I try to play it safe. Just one contract to reduce exposure in case of a pullback. For covered calls, it's similar. Just switch to sell call, choose your expiration, strike price, and number of contracts. That's it. You have set up a covered call. Of course, these won't execute right now because the market is closed, but this is exactly how you place the trades. And one important tip I give is only use this strategy on high quality stocks you are comfortable owning. If you pick a weak or a speculative stock and it drops, it could take months or even years to recover. So focus on strong companies with long term growth potential when selling options. Now, let's talk about covered calls where you are getting paid to potentially sell a stock you already own. I currently hold 100 shares of Broadcom, so I sold a $300 call expiring this week and I collected $50 in premium. Here's the thing, I don't want to lose my Broadcom shares because I believe in their long term potential. My stock prediction model shows high upside and I put my own money behind my picks. You can check out all my predictions in the spreadsheet linked in the description. All right, let's look at the another covered call I made this week. I sold a 101 call on Lamb Research, which I rolled over from last week. I initially sold the $100 strike price for $50 premium last week, but since the stock crossed $100 on Friday last week. I rolled it up to $101 for this week, which costed me $20. So for if this call expire worthless, I keep the shares and make $30 profit, which means $50 with the premium I got last week and the $20 I paid to roll over this position to this week. So I make $30. Small wins like this done consistently adds up over time. I'm not doing this with my full portfolio. I have over $500,000 invested across all my accounts. This is about earning extra income on the cash portion while holding great companies that generate solid returns. Think about it. If I can make at least $300 to $500 a week in safe, conservative income, that money I can reinvest, use for new trades, or build up reserves. And all of this with very low risk. So that's how I use option selling to generate weekly income through cash secured puts and covered calls. Let me know your thoughts. Do you think these strategies fit in your portfolio? Drop a comment and don't forget my stock prediction spreadsheet is linked in the description. It has all my price targets, my returns, and open positions. Like, comment, and subscribe if you want to follow my journey and learn how to invest smarter, safer, and stronger. Thanks for watching, and I'll see you in the next video.